All right, so you earned some 1099 or business income, and now you owe some taxes. Or at least at the very minimum, you expect to owe more taxes at some point in the future, which is not a fun thought for most people, especially when you truly feel like you would be paying more taxes than what you actually have to pay. Then all of a sudden you start to feel like you are being ripped off, or maybe like you have a bad accountant or whatever the case may be. But ultimately, the big question is, well, what can you do right now to reduce your taxes as a business owner? And that is the question that we are going to answer in this video. My name is Sherman the CPA, and I help business owners reduce their taxes every day at mycpacoach.com. And today I am going to give you the easiest way to reduce your taxes as a business owner. And to help you understand why I believe this is one of the easiest methods, hands down, to reduce your taxes, I want to share a quote for you to think about here. This is something that I constantly tell my clients, and that is, do not let the tail wag the dog. The tail is taxes, that's behind you. What's in front of you is your life, your business, your investments, and your personal finances. And I want to caution you from making changes to save on taxes that in turn causes you to make poor business, investment, and personal finance decisions that can wreck your life. You do not have to shake up your whole world or rock the boat to be smart about how you reduce your taxes. But if you watch enough YouTube videos, you will hear some of the most complicated ideas to save on taxes. From setting up complex retirement plans, holding companies, different types of trusts, buying real estate, or buying cars you don't need, and so on to save on taxes. And while these things can truly help you reduce your taxes, it is not for everybody. It may not fit your unique set of circumstances or your situation. For example, if you need access to your money, why would you lock it up in a retirement account? If you don't understand real estate investing, then why invest in real estate? If you don't need a car, why buy one? I constantly see people making terrible financial decisions because they are so scared and running from Uncle Sam. If you consistently spend $1 to save 25 cents, you can find yourself in big trouble. And sometimes people lose sight of that, and I don't want you to. So my first point here is simple. Saving on taxes comes at a cost. And oftentimes that cost is more administration, more fees, more complexity, or the biggest cost of all, the control of your money. And we cannot forget that side of the equation. Now, with that said, let's flip this all the way around and talk about the easiest way to reduce your taxes as a business owner. It's actually very simple. Take the things you do already and find the best ways to use those things to reduce your taxes. Like literally look at everything you spend money on and ask yourself, how can you use those things to save on taxes? You can take things you already pay for, like your housing, transportation, travel, meals, childcare, and so on, and use them to reduce your taxes. Then take a hard look at your investments and ask yourself how you can optimize your investments to reduce your taxes. For example, you could invest more into your business, contribute more to your retirement, restructure how you give to charities, and so on to accelerate your tax savings. But everything needs to be based on you, your life, your budget, and your investment goals. And if you optimize your tax plan around that, you will easily reduce your taxes. And for the rest of this video, I want to ask you 3 questions that may lead you to the easiest way for you to reduce your taxes as a business owner. Question number 1, does your business need more money? Do you want to know the easiest way to reduce your taxes as a business owner? Spending money to grow your business. This benefits you in 2 ways. Number 1, you are going to get a deduction for the money you spend to grow your business. And number 2, you are going to increase the value of your business by consistently investing in it. This saves you money today in taxes and increases your overall net worth if and when those investments pan out. Now, this could be as simple as spending more money in advertising to grow your business, or it can be as simple as upgrading your suppliers, vendors, or hiring better employees to make your business run better. Either way, you can deduct the expenses you incur along the way to improve your business. I have clients that literally reinvest all of their profits into their business and never pay taxes as a result. Or at a minimum, they will take out what they need to sustain their personal lifestyle and then reinvest the rest. Now, there's obviously risk involved if those investments do not pan out, which also has to be considered. But ultimately, if I am a business owner and I want the easiest way to reduce my taxes, the first question I'm going to ask myself is, does my business need more money? If it does, then you would get a dollar for dollar deduction for spending money on your business. And if it doesn't, then I would ask the next question here. Question number 2, can you deduct any of your personal expenses as business deductions? If there is a business connection associated with your personal expenses, you may be able to deduct it as a business expense. This includes home expenses, travel expenses, children, and so on. Now, to illustrate this concept, let's look very closely at the home office deduction. This will help you understand how the IRS thinks about deductions related to your personal expenses in general. So if you use any portion of your home for your business, then you can deduct a portion of all of your housing expenses. Take a look at this directly from the IRS's website. You can deduct 100% of direct business expenses in your home. So if you have a home office, any expense you incur directly related to that space is 100% deductible. This makes sense because those expenses are 100% related to your business. Then you can deduct a portion of all of your indirect expenses, which are expenses incurred to upkeep the entire home. A lot of people forget this. This includes your mortgage interest or rent expense, your renters or homeowners insurance, your HOA expenses, utilities, telephone expenses, Wi-Fi expenses, repairs, and our favorite, depreciation. Now, this makes sense from a tax perspective because your business takes up a portion of the home. So surely it should have to pay its fair share of the total home expenses to run it. Now, the portion you can deduct depends on the percentage of your home that is actually being used for your business. So if you use 20% of your home for your business, then 20% of all of your indirect expenses can be deducted from your business income. Now, the only thing you cannot deduct are unrelated expenses, which are expenses that are related to your business or to the entire upkeep of the home, which makes sense because if you incur expenses that are completely unrelated to the business and completely unrelated to the use of the entire home, then clearly the IRS would not want you to deduct that. Now, I explain all of this to let you know that this thought process is very similar to the usage of other tax deductions. The IRS typically allows you to deduct the business use of your vehicles. And if you travel for business purposes, then you can deduct your flight expenses, hotel expenses, and so on. If you eat a meal with a business contact, then you can deduct the meal as a business expense. Or what about health insurance? Well, if you have health insurance expenses, then your business can reimburse you for those expenses and you can deduct it. Or if you have kids that cost you an arm and a leg, you could hire them through your business, deduct what you pay them, and then the kids can use that money to pay for the things that you already pay for. When it comes to these types of tax deductions, there are levels to this, but the premise is very simple. Take a look at all of your personal expenses and see if there are valid ways to deduct any portion or all of those expenses as a business deduction. Even in cases where you do not think it's possible, you may still be able to adjust your circumstances so that those expenses do qualify as a business deduction, and that is where tax planning comes into play. But eventually you will hit a wall with what you are able to deduct, which leads us to the last question here. So let's say your business is set. You've already maximized your deductions and you don't want to spend any more on your business. And let's say you already converted as much as your personal lifestyle expenses into business deductions as possible. Well, here's the final thing to consider. Question number 3, what is the best way to structure your investments to save on taxes? You can significantly reduce your taxes by carefully structuring your investments. Now remember, you should never invest to only save on taxes. You should first pick good investments, then optimize for taxes. Picking a good investment comes first. If that's real estate, then educate yourself on depreciation, cost segregation, and 1031 exchanges to slash your taxes on otherwise great investment choices. And if that's stocks, then educate yourself on the differences between short-term versus long-term capital gain tax rates so that you don't overpay on taxes there. And if you want to save for retirement, then look at various vehicles that allow you to contribute above and beyond what most people think is possible when it comes to retirement account limits. As a business owner, you can set up 401k plans, pension plans, and other benefit plans through that business that can skyrocket the amount that you're able to save for retirement while saving on taxes along the way. Another example is charity. If you plan to donate to charity, then you may want to consider setting up private foundations or donor-advised funds to structure your charitable giving in a way that can significantly reduce your taxes. In so many ways, I am basically showing you that there are ways to reduce your taxes without changing the course of what you really want to accomplish in your life or in your business. And that is why I strongly believe the easiest way to reduce your taxes as a business owner is to take the things you're already doing and do them in a more tax smart way. You don't have to rock the boat or shake up your whole world to avoid paying Uncle Sam. Instead, you can just do what you already do in the most tax efficient manner. And if you want to learn more about that, then make sure you subscribe to our channel because I already have videos on everything we talked about in this video. And by the way, if you want to get off YouTube and get a custom tax plan personalized to you, then you can apply to work with me directly at mycpacoach.com.